Hey folks, I just want to give you my view on the euro and the dollar in general. We'll have a look at a tweet that I've just seen, but it concurs with my view. I think the euro needs to form a bottom shape. I think we're going to see the dollar weaken over the coming year or so, and that the dollar index is going to fall off. I think we're going to see some of the major currencies like the euro and the pound, Canadian dollar, Swiss franc gain against the dollar. It's difficult to pick a bottom though. I think it's somewhere between the bottom of this sort of megaphone, which is quite a long way further down from here. I'm not sure if we'll get there. And we've got the 1.06 support level, and then the bottom of this megaphone. But it is possible we may find support here at this downward sloping channel line. And if I just it's the overall trend line, and my charts are a little bit slow. There's the bottom channel line, which forms the megaphone in combination with this downward trend line. I think we're going to have to, now that we've broken that downward trend line, we're holding above it, and we could sort of continue to trade along the top of this downward slope. But right now it looks quite constructive. We're at the lower Bollinger Band. We're an oversold stochastic. In the short term, it looks like we might get a bit of a bounce from here, but this might be the beginning of a longer term bounce. Overall pickup in the major currencies against the US dollar. And this tweet I'll show you shortly refers to sort of global growth and the need for a weaker dollar. And there are all sorts of reasons, including the potential, not weakening, but cease in interest rate hikes by the Fed, potentially reducing the interest rate at some stage towards the end of this year or early next year. So all of that's going to play into a stronger euro and pound and a weaker dollar. So we could bounce along the top of this downward trend line. As long as we hold above that line, I think we're pretty good. We're at the 786 fib now, which is my favorite Fibonacci level. If we do get a rally up from the 786, it's normally a strong and a powerful rally. It's my favorite Fibonacci level if it manages to hold. It doesn't always hold the 786, and it's the sort of last bastion of hope for a rally from here. But if it does hold, normally the rally is really strong and really sharp. So I think this is a good entry. And in fact, if we get above these sort of swing highs above us here, about 1.0730, and then this one recently at 1.0780, on closes above there, I might even look to add to a long euro position and start to try and build a long euro trade overall going forward. So that's my idea on the majors going into the rest of this month and potentially the rest of this year, looking for strength in the euro, the pound, the CAD, the Australian dollar, the Swiss franc, and the Japanese yen. We'll see if we can get strength in the yen against the dollar as well. So really that's what I'm looking for, a weaker dollar, stronger currencies against the dollar, and that'll play into our hands right across the board because I'm looking to short dollar yen soon, and I want to be buying these majors. So that's it. I just wanted to put that out there for members. I might just put this up on YouTube as well because it's easier to host it there. So that's the overall idea. If we can hold above here today, I think we've got a good chance of moving higher. It is the 786 fib. We've got a great G3 lower Bollinger Band, 200 Bollinger Band, oversold stochastic, and quite near this downward sloping trend line, which has recently been broken. This pattern over here, this structure that you see right in front of you on the charts, is actually a reversal pattern. Whether we need to complete this megaphone and test the bottom of the megaphone or not doesn't always happen, but as it stands, this is a reversal pattern. You could see it as a diamond pattern as well. Let me just quickly draw those lines in just to sort of illustrate how the diamond would look. And this is a diamond. It's another reversal pattern. If it holds there, we've got a diamond reversal on our hands, which is also a pretty powerful and pretty useful reversal pattern. Just drawing this as I'm doing it. So there's the diamond. It's a bit tricky to see with all these lines everywhere. Now I'm going to clean them up. I don't like lines all over my charts. But if you take where I'm using the mouse, I'll try and actually highlight this mouse right now on Camtasia, my editing software. I'm just going to trace the diamond out, hopefully with a big yellow blob. So it goes like that. So there's the diamond. It's also a megaphone. But I really like this 78.6% Fibonacci, this rising sort of channel bottom, red horizontal support, and oversold stochastic. All looks good. Hopefully we can build a longer term long idea. We might be in and out of trades frequently, out in. In other words, buy on dips, long on extensions, buy on dips, long on extensions, and so on, and build into a longer term view on this. And if we do get this currency moving up, we should move above this recent high this year at 1.1 essentially, just above 1.1. We could get up into, 1.134567, somewhere up there, a long way above us. So that's my overall view on the euro as it stands. Of course, the markets are fickle, and so are we. So my view might change tomorrow or in half an hour. But because I no longer drink alcohol, I haven't done for 2 years, my views don't change as much as they used to. So you're in good hands. Looking good on the euro. Take care. Just a quick update.